Now, the Chinese banks have surpassed the United States in global financial dominance, at least on paper, and fresh data shows the Industrial and Commercial Bank of China, or the ICBC alone, sits at roughly $7.6 trillion in terms of assets, followed by Agricultural Bank of China, near $7 trillion. And just four state-owned giants, including China Construction Bank and Bank of China, control about $25.5 trillion. And that is a quarter of the world's top 50 banks' combined assets. Now, add the Bank of Communications and other state lenders, and China's footprint amongst the world's biggest banks stretches well past $50 trillion. Now, compare that to America's biggest three. JP Morgan Chase at $4.4 trillion, Bank of America at about $3.4 trillion, with the US trio including Citi lands closer to $11 to $12 trillion, far short of matching even a handful of Chinese megabanks. But the size isn't the whole story. Now, look at market capitalization and the picture flips hard. Market value is what the investors actually think these banks are worth. Now, JP Morgan's market cap tops $780 to $900 billion, nearly triple that of China's most valuable bank, the ICBC. So why this gap? Chinese banks are policy tools first, profit engines second. They are forced into cheap lending to prop up local governments, real estate and infrastructure, compressing the margins. The Morningstar analysts note that Chinese state banks ramped financial investments nearly 19% in 2025, acting as a direct liquidity channel for Beijing's stimulus push, fueled by record government bond issuance. So the real signal isn't who's bigger, but who's more efficient. Now, China wins the balance sheet war, but America wins the confidence war, and that divide, state-directed scale versus market-driven profitability, increasingly defines the global financial rivalry between Washington and Beijing.